Hello, Maverick Traders. This is Rob Reinhold, and this is the Currency Recap. We are getting short on days of the year going into 2022. It's almost the end of the year, but let's cover what's going on lately. We had a down day in equities. We had a risk-off move. We had the S&P down 1.4%. Now, at one point, it was down well over 2%. We did get a nice little bounce at the end of the day. The VT down 1.2%. Crypto basically flat. And we had gold and oil go down, but again, well off the lows. So overall, we had a risk-off move. There was a little bit of buying at the end, but still a down day. One of the reasons we did have a down day was because US GDP was revised higher in the third quarter from 2.9 to 3.2. Now remember, we've been talking about how good news is bad news and bad news is good news. Typically, this would be good news for equities. A stronger economy is always good, but what it means right now is that the Fed is likely to be more restrictive. And so we had a sell-off across the board. As you can see, if we come up here to the S&P, we talked about how once we broke this support level, that we were now no longer bullish to neutral in equities, we were bearish. Now we've come down quite a bit over the last couple of days, and we really ran into this pretty big level of support. This level of support right around 3780, 3790. But take a look at how many support and resistance points we have here on this line. You can see here that this is an area that we do have to recognize that the market is likely to need to take a little bit of a breather before it breaks down below that line. We could rally all the way back up to 3930 and still be just in a downtrend and experiencing a bear rally. Until 3930 is broken, you cannot be bullish. You must be bearish. On the longer term, we do expect us to see some lower lows here over the next couple weeks. We jump over to the VT, you can see about the same thing coming down into this level of support. We fully expect after this huge, massive drop, this is a big drop here. 92 to 85, that's almost 8% in just a few days. We're likely going to have at least a consolidation, a base here, or a little bit of a bounce. But the next move does look to be lower in equities. Cryptos, we've been saying, don't even think about the cryptos. Look at what you've had to deal with. Since the big bankruptcy of FTX, we bounced back. We went nowhere for like 3 weeks. And then in one day, we shot up 8%, and we went nowhere for a month. And then in one day, we shot downward, and we're going to go nowhere here. This trade is very difficult to catch. Most of the trading will be done in choppy markets. It's just going to chop you up. We say don't even think about trading cryptos at the moment. Hopefully next year they become better, but for right now, not that interesting. We do have to move our market outlook down to a -2. We were at a -1 earlier in the week. We definitely have weakened since that point. Let's take a look at the calendar, and I actually put up the calendar for the next 2 weeks, just so you can see that basically this is the last week that we'll have any sort of economic news. So tomorrow we have Canadian GDP in the morning, and we have the US PCE price index. I expect tomorrow to be a pretty good trading session, and really the last big day before people pack it up and go on vacation. Let's take a look at the currencies, and again, I'm going to be looking at them specifically for tomorrow's trading. We have one more day this week, and then we will have a holiday on Sunday and Monday. Let's jump into them. This is where we were in currencies just 24 hours ago. Short Kiwi, short pound, and really yen is the only currency we liked to the upside. Let's take a look at how things did perform. As you can see here, we had a pretty mixed return here in the crypto market. The big coins, Bitcoin, Ethereum, Litecoin, basically unchanged. Everything else a little bit higher. Not all that interesting. Over here in Forex, much more interesting. Now remember, we said that we had the Kiwi and the pound as shorts and the yen as long. Okay, the pound didn't really go anywhere. Pound was middle of the pack. But as you can see, the Kiwi was the weakest and the yen was the strongest. So that's what we liked over the last 24 hours. We are definitely going to be updating that and taking a look at it. Let's do that right now. I'm going to start out here with the yen. Now this is a 4-hour chart on the yen. We had the huge run from when the Bank of Japan widened their band, basically raised interest rates, which was a huge surprise to the market. And then you can see that we've just gone sideways from that point. Now again, this sideways range is actually a pretty decent range. This huge move here just makes everything look very compressed. Look at this. This is a high base. This is a high base. At some point, the yen looks like it wants to move higher. So we still like the yen on the long side. So we liked the yen yesterday. We like it again today. Let's come over here to the dollar. Now, the dollar was actually rated as a -1. And you can see that things have changed over the past 24 hours. So again, these are 4-hour candles. So this represents the last 24 hours. And you can see before that, the dollar was drifting lower. We had a nice candle here this morning, and we hit above the parabolic SAR. We went above the 50 of the RSI. Things are looking a little bit more bullish here for the dollar. EMAs are turning up. Everything looks now more bullish than bearish to the dollar. That being said, look at this RSI. It is basically going flat. I do have to upgrade this to a +1, but that is about it. Jumping over to Swiss franc. We've basically been saying Swiss franc isn't going anywhere, and it is just simply proving us true. Take a look at this. EMA's flat, RSI flat, everything's flat. There's no reason to trade Swiss franc at this point. The other currency we really liked over the weekend was the euro. The euro, I'm going to jump to a daily chart. Look at the strength that the euro has been showing lately, and we had a major breakout last week. Now, we did get a pullback these first couple days. If we take a look at this on a daily chart, a breakout, a pullback, a bounce at support, this is a really nice longer term bull pullback. I think at this point, if you were just waiting for the euro to pull back and consolidate, I think that has happened. And if we go into a 4-hour chart, we're just waiting for some sort of strength. So we could draw a trend line here. That would be something to look for, a breakout of this trend line, a breakout of this parabolic SAR, a little bit of a steepening in the RSI. The euro, to me, I like it. It just isn't ready yet. It's not ready yet. By tomorrow, we could absolutely see euro back in play and as a +2 that we could go long. We have the pound as a -2, and you can see over the last couple of hours, we've had a pretty mild little bounce here. So from 148 up to almost 149. We like these little rallies. Anytime this pound has just had one of these little rallies, it's been a great time to short it. Now look, I don't know if it's over yet. We could move our way up. We could move all the way up to this area here and still be in a bear rally. As you can see here, we're just not turned over yet. RSI, I would love to see the RSI get up to 50 and start to turn down. That would be a very, very good entry on this. So on the pound, I still like it short. It's one of my favorite shorts out there. I just say right now it's not ready. Maybe by the European session, it has had enough of a move to where we can now say, okay, the momentum is now to the downside. The Canadian dollar has been extremely weak for the last couple months. If we go to a daily chart, you can see that this thing has just fallen off the table. Once it broke this support, it fell. However, over the past 2 weeks, you can see that it's tired. This is a huge move. And when we see huge moves, we typically get bases. We're in a base here. That's where we are. This is a daily chart, and you can see for the last really 2 or 3 weeks, it has been going nowhere. If we come into a 4-hour chart, it's not going to tell us anything different. It's stuck. There is no reason at all to trade this until it gets out of this range. So CAD on the shelf. Let's talk about Aussie dollar. Aussie dollar has been one that has been perennially weak. If we look at a daily chart, you can see it's also been weak. We had a nice little breakdown just a couple weeks ago. But at this point, it's a little messy here. Take a look at the last 4 days here. One big down day, one big up day. One day where we had a really nice run, we gave it all back. We are just sitting right here in the middle of kind of a range. I would want to be really crying out, I want to be short Aussie, but I just can't. I just can't here because the shorter term price action on the 4-hour chart is not telling me, hey, there's a lot of selling. I even go down to a 1-hour chart. this is, at this point, it's nothing more than a pullback from reaching a resistance level. There's nothing here saying, go ahead and be short this currency. Coming over here to the Kiwi, we liked the Kiwi short as well. The pound and the Kiwi were our favorite shorts. And you can see that the Kiwi is just basing here after this big move down it had. And I think the Kiwi is just, like the Euro, is ready to go. It just hasn't gone yet. So we'll take a look at these currency crosses here in just a second. But let's update exactly the movement we've seen. So we saw the dollar that was at a -1. It gets bumped up to a +1. Any more strength, I can bump that up to a +2. Okay, Euro, we like Euro. It's starting to look a little stronger. It's had its pullback. We're just waiting for that last little bit to tell us it's ready to go. And then the Aussie is actually back down to a -1 here. This is where we stand. So it's very easy what we're looking for. We're looking for Euro, Yen on the long side and Pound and Kiwi on the weak side. Let's take a look at those crosses. Whenever you have two currencies that you say, oh wow, I really like Yen and I really like Euro, the best way to find out which one is the best is just to pair them up against each other. So here's a question. Right now, if you take a look at Euro Yen, which one looks stronger? And you can see nothing. Neither one looks stronger, which means that it really, at this point, you really can't determine that the Euro is stronger than the Yen or vice versa. So it's about the same here. So Euro and Yen are about the same strength. Now remember, we also liked the Pound and Kiwi on the short side. So let's do that on the Pound and Kiwi as well and see if we can actually get an idea of which one is actually weaker. We take a look here at a 1 hour chart. We can see that right here, right now, the Pound is gaining. A nice little bounce here against the Kiwi, which tells us that the Kiwi is actually the weakest currency at the moment. As I said, I'm looking just over the next 12 to 24 hours for the next trade. So I really like to focus on what's moving now. So Kiwi is the weakest. So it really doesn't matter if we pair Kiwi up against the Yen or the Euro because they are actually acting about the same at the moment. So I'm going to go here to a 1 hour chart. I really like how this is looking because we have started to break down below the low of this base. We had this nice low base here, and you can see we're trading below it. We rallied right up to it, hit our head on it. Look, we just need one more candle. A red candle here will be a confirmation of the reversal here, and that will be probably somewhere around 82.60, 82.65. If this is a red candle here, I'm looking at a 1 hour chart. I think you can have a nice entry here, and then it stops somewhere above this 83 area, above this parabolic SAR. And I think you use that parabolic SAR to trail it down, have your trailing stop attached to this parabolic SAR. Once that's pierced, you get out, you take your gain loss, and you close it up for the weekend. So Kiwi Yen looks good. And as I said earlier, Euro and Yen are virtually about the same strength or weakness. And you can see you're seeing the exact opposite pattern here. You're seeing a high base. At this point, we're just waiting for this 169.80 to break. So if you want to put an alert out, 169.80 on Euro Kiwi, I think that is the nice entry. You can do the same thing, put a stop underneath this parabolic SAR right here down about 169.30. And as long as this thing moves and stays above the parabolic SAR, stay long it. Once it breaks below, you get out, take your gain or loss, and move on. To wrap this up, we think there is more risk-off movement expected. Understand we are in the last 2 weeks of the year. Typically, this is where you get what's called the Santa Claus rally. A lot of the major players are gone. There's light volume, and so just a couple people can move this market up or down. This year, I think, is different. Right here, right now, who is out there buying equities? Everyone looks at the next year saying, oh boy, the next year looks terrible. I think the reason we're seeing such weakness is that there are no real buyers out there, but there are still sellers. I think the market is very likely to drift lower next week as well. And I actually think because of the lack of buyers, it could get pretty nasty. We saw down 3% at one point on the NASDAQ today before it rallied back. I think we could get a couple more of these days. So we do like euro and the yen long. So take a look at those currencies. They're looking great. One reminder to our traders, there is no currency rooms, what we do over the weekends, for the next 2 weeks because of the holidays. The Forex markets will open back up at Interactive Brokers on Monday night, the 26th at 7 p.m. Eastern Time. So that is when the Forex markets will open back up. That does not mean that you should trade it. Boy, that's going to be super light volume. We recommend you wait until the U.S. session opens on Tuesday before you're ready to take a look at making any sort of trade. That is the currency recap. Thanks for joining me. Goodbye, everyone.